Hello everyone and welcome to Day Trader S&P 500. This is Dale Woodson, one of Timer Digest's top ranked stock market timers. Today is December 13th, 2020. We're early today because we're so excited about all of the action that should be coming up this week. And as you know, I've been trading for over 30 years and I bring all that trading experience to the channel. Recently started a short-term trading service. You can see our 3-year track record there. I do average over 700 trades a year. So if you don't want to sit in front of your computer all day, Striker Securities does auto-trade our futures trades. So you can open an account with them and get all of my signals auto-traded. And reminder, we appreciate you guys patronizing our channel. So if you could hit that subscribe button, the alert bell, a reminder bell, and the like button, we appreciate your support of our channel. A lot to go over today. We want to look at a top-down approach with the S&P. We're going to also update gold and Tesla. As you can see, we're in a monthly log chart here, and this is the larger view from the 1987 low. And you can see here, we'll just trace out our waves. Big picture down. This is the biggest picture monthly log. We have wave 1 up there, an ABC correction for 2, 3 there, 4 there, and 5. That's the big question. Where is 5 and where does it end? Okay, we can obviously see here, we can get our second wave is an ABC flat correction, which is right here. Okay, and if we look out to the wave 4 in the guideline of alternation with the corrections, we have a flat, and then 4 is an expanding triangle with higher highs and lower lows. I may have that on the next chart. There we go. There is the high. I wanted to show something else here real quick. Let me back up a second with wave 1 and wave 3 and the nice Fibonacci equality through that. If I can do this here real quick. Okay, let's get our Fibonacci extension tool out, and here's our 1987 post-crash low. There is the wave 1 high, and we get a projection for wave 3, and I got that off by a little bit. Let me get that close there, and wave 1 is right up there, and there is the low, and you can see wave 3 ends up right at the January 2018 high. Okay, so that's where wave 3 is a Fibonacci 1.618 multiple of wave 1. We had called that the orthodox top for a while back there until this expanding triangle formed, which we labeled early and before anyone else. So we can look at this expanding triangle here, if you will. We can get an A down, a B up, a C down, a D up, and an E down. That is a 4. As you can see, we'll get the trend line here. We have an ascending top, and we could get the trend line on the bottom, and we have a descending bottom. Some people call this a megaphone. I call it an expanding triangle. Okay, perfect classic fourth wave. Don't see those very often. It might have been in 1970 since the last time. So that is the end of 4 over there. As you can see, there is our 4. Okay, and now we're going to look at what happens from the bottom of that, which was our March lows, March 23rd of 2020 to be exact. So there is the March lows. We're looking now at a daily bar chart. I like the bar charts, and we can again do our Fibonacci extensions and see what we have here. Here's our low. There was our wave 1 high. There was our wave 2 low back in April and May. And you can see wave 3 right here on the September 2nd high was where 3 equals 1. And since then, we had a flat 4. Let's go ahead and label that for you guys here real quick. Give me a second to get to my tool. Okay, and then we have a 1 here, a 2 there, a 3 there, a 4 there, and then where is 5? This is not primary degree. It's more like intermediate degree. There we go. Okay, so if we extrapolate this out, and this is where we're getting into our primary wave count, we can take wave 1 and put it at the bottom of 4, and we can see where does 5 equal 1, and it's right under. I had 39.96. Okay, this might not be exactly to the bottom, but 5 will gain equality with 1 just under 4,000. That is our primary count. Okay, so let's go further. We can look at this again. We're top down. We're going to go from that October 30th low, which is right here, and you can see what we have is a 1 up and a 2, and then what is all of this? Okay, so we can show that. Let me get this expanded a little bit. Let's do our wave count here for everyone. We have a 1, a 2, and a 3. We'll throw 4 here for now and 5 up there. Make that 1 degree less, so that will be minor degree. And I want to show you guys how perfectly this fractal did, because it's a 5-wave within a 5-wave. They all are. But this one shows pretty perfectly. If there's 1 and there's 2, then within 3 we have a 1 up. Oops, I didn't start at the right spot. Hang on a second. Let me start that again. Bear with me, please. Okay, from here we have a 1 and a 2 and a 3 and a 4 and a 5. And of course that will be 1 lesser degree. So we can put that down to minute, and we'll move 3 up there. So you can see within wave 3, we have a 1, 2, 3, 4, 5. Within 3 we have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up to complete the third wave. Okay, and this is the exciting part over here. Okay, from that low. So what we got here is that 5 waves up. Okay, so we can call this. Let me get over here to our wave count. Bear with me a second. We can call this a 1 and this a 2. Okay, and we've got 5 waves up here for a 3, a 4, and a 5. Now notice that this 4, put it up there. There we go. Stays above that 1. Okay, we can count 5 waves to the upside here. Okay, and this could be over. Okay, so our primary wave count shows that we're going up to 4,000. Our alternate wave count is that we have an ending pattern right here. 5 waves. If we go within here, we can see an ending diagonal triangle where 4 overlaps 1. Maybe I can get that in here, squeeze it in without getting to a smaller time frame. I want to see if I can do that here from 4, and that's a 1, 2, 3, 4, 5. And here we have 1, 2, 3, 4, 5. Yeah, you can see it right there where wave 4 right here. Here's the wave 1 high here, and there is the 4. Okay, so that could be an ending diagonal triangle pattern. Ending meaning it's the end of the move. It's the end of this 5th wave. It's the end of the 5th wave going all the way back to at least the March lows and possibly longer into the 1987 lows. But we'll have to watch that unfold. But we need the wave 1 high to be broken at 36.28. We got down to 33.33 here on Friday. So tomorrow's action, which actually starts tonight at 5 o'clock with the futures, should prove exciting to say the least. Either we're going up toward 3,000 or we're breaking through here and we're getting the alternate count. And what makes the alternate count so intriguing is our Fibonacci time spiral. And we'll go back, we started this in at the September 2nd high, okay, which was wave 3. And just as a review, our time spiral, which has Fibonacci sequence of days beginning with 8 and going through to 55, caught every alternating high and low with a slippage of either +1 day. The 10-12 high up here had a slippage of +4 trading days, and the low here, all the other ones had +1, and this one here, the October 30th low, had a +3 trading days, where it was pointing to 1027, and it actually occurred on October 30th. So our time spiral served us well, and what our big question now is, did it end with the 55-day low, which always marks either the low or a spike or panic low after all-time highs, or is it still continuing? Okay, so again, this served us well, caught every high and low alternating turning point with a little bit of slippage there, enabled us to trade very well. Now it pointed to November 30th. Okay, so let's swing forward and update this to the more recent wave count. And this is a little review, but here is that ending diagonal pattern, and really the 3 belongs up here. I'm sorry I didn't update that, but this is 1, 2, 3, 4. 3 is here. And then we have the other 1, 2, 3, 4, 5 for 5. So that is mislabeled. My apologies. But our preferred count shows a move up to 39.96. Okay. And our alternate count shows an ending diagonal triangle with the whole entire 5 waves completed at the 12.9 high. And you can see in our Fibonacci time spiral here, 89 days pointed to November 30th, and we had a high on 12.9. The futures topped on 12.8, right on the 8, and the cash on 12.9. Okay, so that would portend the the time spiral suggests that the move is over. Okay, but we'll get confirmation with this move below 36.28, and this went down. I think we can see 36.33. Okay, let me get yeah, right here. Okay, that low is 36.33. There's our make or break right there. The wave 1 high. I can move these up here. You can see 3 is in the right spot here. It actually goes right there, and 4 is up there. Okay, and there is the 12.9 high on wave 5. So there's our line in the sand. If this holds, the S&P is going to go up to our 39.96 target. If it doesn't, this move is done, at least this degree, if not larger degree. So that's what we're looking at. Let me see if there's something else I wanted to. Oh yeah, here is the update from that 12.9 high. We have a 15-minute bar here. You can see 1, 2, 3, 4, 5. There's the first wave down. We had a second wave correction. We have another 5 waves down for 1 of 3, 2 of 3, and then 3 of 3. So this high here, I believe, is 36.78, would have to hold. Okay, so we're looking at that move up here. That should be complete, or it should hold below this high, and we're looking at 3 of 3 down. So Sunday's futures and or Monday's open should give us a signal. We've been waiting for this to tell us one way or the other, and exciting times. We should know. We're either getting a 300-point move up or a huge move down. So the next session should be exciting, to say the least. Okay, that's it for the S&P. Line drawn in the sand. We'll see what happens. Let's move on to gold. And gold, you know, we have that 5-wave pattern. Okay, from the March lows, we can make this a little bigger for all you guys to see. But nothing really has changed in gold. We identified the wave 1 high, the wave 3 high up here, maybe off the screen. There we go. Okay, and then this is a descending triangle pattern. Okay, let me draw that out for you guys, please. Give me a second here. Okay, and from the top we had an A down, a B up, a C down, a D up, and a throw under in wave E, a classic throw under pattern of a descending triangle. Wave 4 has to hold above the wave 1 high. It has, and that indicates that we should be seeing a 5th wave up. This is the initial waves of that 5th wave up, and I can give you guys that target. It has not changed, but just to update here, let's get an extension from the low to the 1st wave high, and here is the 4th wave low here, and that shows 2079 if 5 equals 1, which would be a double top with 3. Again, all it has to do is go above that high technically to be a 5th wave. That high is 2075. That would qualify. What would be more likely would be if it gained a 1.618 relationship, which puts it at 2273. As this unfolds, and this is a daily bar, we'll have to watch this and see our internal wave counts, 1, 2, 3, 4, 5, all of that. Obviously, this low here has to hold for this wave count to remain valid. If this low is broken and the wave 1 high is broken to the downside, we will move to a short position in gold. Unless and until that happens, we remain long. And good old Tesla. Okay. By the way, I want to remind myself to tell you guys about the trading strategy for the key reversal days. Let me get back here real quick. Can I get a daily bar? Yeah. Okay. Let me make this a little bit bigger because we had a key reversal in the S&P on 12.9, which also favors the top alternate count, saying that the high is in. Okay, so we made a new all-time high over here. Let me just zoom in and make that nice and clear for you guys. Okay, there was a previous high, a new all-time high, and we closed below the previous day's low. That is a key reversal day. Okay, so we can look at our key reversal trading strategy. Let me see where I put that, you guys. Here it is here. Okay, you guys might take a picture of that or pause the screen, but 12.9 was the key reversal day. The day after, 12.10, condition 1, must make a new low. It did. Must close lower than yesterday. It did. If not, we would exit. It's a 4-day trading strategy. Okay, the market cannot exceed the previous day high. This is in regards to the S&P. It was 36.78. Place your stop above there. Market does not have to close lower. And here's Monday. This will be key. The market must close lower than day 2 and make a lower low than day 2. Then we lower our stop above the day 2 high, and then we go to day 4. Okay, these conditions have to be met Monday. Otherwise, the key reversal trade is off. And I want to note that this could be more than a 4-day trade. We'll have to see how this plays out. Like I said, if that ending diagonal with the 12.9 high is the end of the fifth of a fifth wave, then it's going to be obviously a much larger retracement than just the most recent 5-wave advance. Okay, which brings us back to so here we are here with that trade. Okay, brings us back to Tesla. Tesla made a key reversal day. This is the second one. I think it was right here, and now it did another one on the same day, 12.9. So the fact that Tesla and the S&P both appear to have topped on the same day, both put in a key reversal day, is another strong suggestion that the top alternate count, that 5 is in, and we're not going to 39.96 in the S&P. Okay, and as you can see with Tesla, let me back this out a little bit here. Okay, we are looking at 5 of 5 of 5. We've got 5 here going all the way back. I'll show you here to the October 2019 low. We have a primary degree. Move that up so it looks a little better. 1, 2, 3, 4, 5. Okay, and we had that triangle 4th wave in Tesla too. We can show that if you guys want to see it. There is 3 and there is 4, and we had, I'll label that for you guys, another review in our triangle 4th waves. I love 4th wave triangles. Okay, so you can see here we had I'll get my trend lines here. Okay, we had a flat top, and we had, whoops, there's our flat top, and our trend line here, our ascending bottom, and again the throw under in the 4th wave. Okay, there's our A, B, C, D, E. There's the throw under, and here is the 5th wave, and it goes up in intermediate degree 1 and 2 and 3 and 4 and 5, and you can see within all of these are 5 waves. There are 5 waves here. There's extended 5 waves here. There's the fake out key reversal there. We knew it right away. I think we've had a couple of them, and yet another one. This is an hourly chart, but let me go back to the daily, get in here so you guys can actually see that key reversal day right there. This is a daily chart. You can see the previous all-time high. We made a new all-time high. Tesla. and it made a lower low, closed below the low of the previous day. So that same 4-day trading strategy on the S&P also applies to Tesla. Okay, so you can do the same thing. And again, this certainly appears to be wave 5 of 5 of 5. So that 4-day would apply to just this most recent 5-wave advance right here, or here, or it's most likely the entire 5-wave advance. Let me see, we got into here. So let's just do some of that here, okay? Let's look at from this, let me see what else I have here. Okay, I've got that one there. So that goes from that 4th wave low on December 2nd, which should be there. So we'll look at this 5-wave decline, okay? And we'll get a retracement of that right there. It's almost perfect. You can see if Tesla retraces this 5 waves here from the October 30th low. By the way, that's the same as the S&P. It's nice how Tesla all of a sudden is trading like the S&P since they're going in it this week. Okay, so we would look at a retracement to 549, 516, or 484 for our Fibonacci targets. But to back out or back in, we can go to this 4th wave low. And let's get the retracement there. Fibonacci retracement. Again, these may not be exact. I like to take my time and get them on there. But you can see already the retracement has started and gone past the 618. So I really like to do this from minute up to larger when we're looking at retracements. You know, we started top down going at the extensions and how high it goes. When we go low, I like to look at this. So it's like the most recent 5-wave rise from December 2nd low. If it goes past the 618, it's probably a bigger correction. So we can work our way backwards from this 5-minute scale, and then we can go, okay, now we're at the hourly scale, and what are we retracing here? As you can see, Tesla has not gotten to the 382 yet. Once it does, and if it goes past the 618 retracement, which is 484, then we go back, okay, we're retracing something much larger than that, and we can go and look at the larger degree from here. Okay, and you can see I traced out on here some extensions where you got 1 down, 2 up. Where does 3 equal 1 here? And it's 1618 and a 2618. Looks like I have a couple of them there. Let me remove that, and let's just see if we look at from the October 30th low. I may be duplicating here. Did I do the October 30th low? Yes, I did. Okay, so let's look at, and we're in gold. Okay, oh, we have them right here. Let me back out. You can see our targets here for this retracement of the entire 4 waves, or the most recent one here. Here we are here. Okay, that's 0. That's 618. There is 0. All right, that is going back to the October 2019. If we or Tesla is correcting wave 5 of 5 of 5, going all the way back to the October 19 low, we could see a move to 420, 349, or 278. Okay, I expect that Tesla will probably most likely follow the S&P. So we're looking at our make or break level right here, 36.28. We're looking at our turn date, and this would be, if this is marking alternating highs and lows, we're looking at late January for the next low. That's why it would be more than a 4-day trade. Okay, if this is 5 of 5 of 5 and the market proves it by breaking this low, throw out 39.96 for a target, and there we are with the S&P. Again, there's our target. Okay, we'll see what Sunday night futures brings and Monday morning. Until next time, take care, everyone.